Hello, hi, namaskar to all the viewers of this particular channel who wants CA aspirants to the CA achievers, my dear students. In the last session, we have completed a few problems on inventory valuation of chapter 4 of CA Foundation, right? Wherein we followed the method called historical cost method. When to apply the historical cost method? We have to apply the historical cost method when closing stock is given at what price? At selling price. When the closing stock is given at selling price, my dear student, we have to apply the historical cost method. Okay. Now, we are entering into the new method, a new style, a new type of a problem under inventory. Here, my dear student, the closing stock is not at all given. What is not given? Closing stock is not given. In such case, we have to calculate the closing stock. That closing stock can be calculated in two types. One is a statement type. Another is trading account type. These are the two methods. One is a statement method. Another is trading account method. I prefer to go for trading account method rather than the statement method. Now, how to start this trading account method? Very simple. As you know, opening stock comes in debit side, purchases comes in debit side, direct expenses in the debit side, sales on the credit side, then closing stock is on the credit side. When once you close, we are getting what? Gross profit. In this particular method, my dear student, either closing stock is question mark or else opening stock is question mark. Any one among the two is question mark. We have to work out any one among them. But what is given to you in our problem? Gross profit is given to us. Now, the next concept. How the gross profit is given? See, I explain. Please make a note of this keynote in your notes. For example, gross profit 20% on sales. Fine. Sales amount is 1 lakh. See, my dear student, please be careful. Gross profit 20% on sales, and you know the sales amount. Profit is on sales, you know the sales amount. Now your gross profit will be 1 lakh into 20 by 100, it comes to 20,000. If it is 30%, we have to take, if it is 30%, we have to take 30 divided by 100. If it is 40%, we have to take 40 by 100. If it is 10%, we have to take 10 by 100. Because, my dear student, the profit is given on sales, you know the sales amount. In such case, 10 10 by 100, 20 20 by 100, 30 30 by 100, 40 40 by 100. I go for another concept. See here, gross profit 20% on cost, but you know the sales amount 1 lakh. You know what? Sales amount. But profit is given on what? Profit is given on cost. Please, my dear student, make a note of it in your keynote. Gross profit is 20% on cost. You know the sales amount 1 lakh. What happened? Profit is given on cost, but you know the sales amount. This is called mismatch. क्या हुआ इधर? मिसमैच हुआ. Then how to work out a gross profit? Gross profit is take the sales of 1 lakh into 20 by 120. Why? Because sales is cost plus profit. Cost 100%, profit 20% on cost. So we have to take 120. I think we are getting 16,667. If gross profit is, instead of 20, if it is 30% on cost, then 30 by 130. If it is 25% on cost, 25 by 125. If it is 10% on cost, 10 by 110. Please, my dear student, I am requesting you, please make a note of these two things. When the gross profit is given on sales and you know the sales amount, this is called match. Either match hua both, then that's why we have to take 20 by 100, 30 by 100, 40 by 100, 10 by 100. But here mismatch hua. Profit is on cost, but you know the sales amount. In such case, we have to take for 20, 20 by 120, for 30, 30 by 130, for 25, 25 by 125, for 10 it is 10 by 110. I hope you got it. This is the second concept you need to remember. Then I tell you the third one. What are the contents of direct expenses? Please make a note of it. What are the direct expenses? Wages is a direct expenses. Carriage inwards is a direct expenses. Freight and octroi is a direct expenses. Factory and manufacturing expenses is a direct expenses. Packing expenses and transport expenses is a direct expenses. Then dock dues, clearing charges are the direct expenses. Wages, carriage inward, freight and octroi, factory manufacturing, package and transport, dock dues, clearing charges. These are all called direct expenses, my dear student. But office and administrative expenses, selling and distribution expenses, they are called indirect expenses. They comes in profit and loss account. They are not to be recorded in which account? In trading account. Please, my dear student, make a note of these three things in your notes. One, when there is a match, profit is given on sales, you know the sales amount, we have to take by 100, by 100, by 100. If the profit is given on cost, you know the sales amount, we have to take by 120, by 130, by 140, by 110, by 105. If it is 2%, 2 by 102. The second point you need to make a note of it. Third one, what are the content of direct expenses? You need to remember all these direct expenses which comes in trading account. This office and administrative, selling and distribution, indirect expenses, they comes in profit and loss account, but they won't comes in trading account. Please make a note of all these things in your notes, in your key notes, before starting the solution for our next problem number 5 in the class 3. Shall we? Fine. Let us move on to the problem number 5. Okay, this is your trading account method. I used to follow the trading account method. Okay, shall I start? I read the problem. From the following particulars, ascertain the value of inventory as on 31st March 2020. We have to ascertain for 31st March 2020. Okay. Inventory on April 18 is given. See, we have to ascertain on 31st March. Inventory on April 18 is given, 19 is given. This is, my dear student, opening stock. There is a purchases, it comes in trading account. Manufacturing is a direct expenses, right? Selling expenses is a indirect expenses. Administrative expenses is a indirect expenses. Financial charges means interest. Interest is also indirect expenses. So, I can say that selling expenses, administrative, finance expenses are the indirect expenses. They won't comes in trading account, but they come in profit and loss account. Sales is given. Fine. At the time of valuing the inventory on 31st March 2019, 31st March 2019 means which inventory it is? It is the first inventory, that is April 2019. A sum of 17,500 was written off on a particular item which was originally purchased for rupees 50,000. See what happened here. I explain in detail. Please listen to me. What happened in this particular transaction? See, opening inventory, a sum of 17,500 was written off. 17,500 आपने written off किए, but it was originally purchased for 50,000. So अब क्या हुआ? Out of 50,000, 17,500 you have subtracted. Left out is what? 32,500. This is not yet subtracted. Now what to do? You have to subtract this out of your opening stock. Out of what we have to subtract? We have to subtract the difference between these two out of your opening stock. Similarly, and was sold during the year for 45,000. Oh, it is being sold for 45,000. So sales star mark, opening stock star mark. Opening stock star mark, sales star mark. During the transaction relating to this item, the gross profit earned during the year is what? Gross profit earned during the year is 20% on sales. Shall we move on to the solution for this particular problem, my dear student? Okay, fine. So, I usually apply what method? Trading account method. Shall we start? Please, my dear student, listen carefully, try to understand to a maximum extent. Inventory on April 2019 is given. Inventory on April 2019 means it is a opening stock. So let me write to opening stock 1st April 19. How much opening stock? 1,42,500. Fine. Out of this 1,42,500, what happened? A sum of 17,500 was written off during a particular item which was originally purchased for 50,000. See, this inventory was purchased for 50,000, but you have written off only 17,500. Then how much is not written off? 32,500 is not written off. Now what to do? We have to subtract that 32,500. How to subtract? See here. You take opening inventory 1,42,500 less balance to be written off. How much balance? Out of 50,000, 17,500 is subtracted. Now you subtract 32,500. Now your answer for opening stock will be how much? 1,10,000 rupees. I hope you got it. Opening stock 1,42,000, balance to be written of 32,500, 1,10,000 is your answer. Fine, let us move on to next one, purchases 7,62,500. You take purchases. Do we have any purchase returns in the problem? No. 7,62,500. So you take 7,62,500. Then manufacturing is a direct expenses 1,50,000. To manufacturing expenses an amount of rupees 1,50,000. So you record that 1,50,000. बाद में क्या दिए उन्हें? Selling expenses not comes in trading, administrative also not to be recorded in trading, financial charges not to be recorded in trading because they comes in P&L account as a indirect expenses. Sales दिए 12,45,000. Where to record the sales? On the credit side. 12,45,000. Sir, why you have taken in the inner column? See my dear student, because sold during the year is 45,000. Whatever the items you have written off now, that is being sold for 45,000. That is to be subtracted. Less sale of, it is called abnormal items. 45,000. You are getting a balance of 12 lakh. Did you understood? Out of stock, you have to subtract the balance to be written off. Out of the sales, we have to subtract the sale of abnormal item. Fine. Finally, what they have given? Gross profit is 20% on sales. So now let me write to gross profit 20% on sales. Gross profit is what percent? 20% on sales. Now what is your sales? 12 lakh. This is what? Sales. Profit is given on sales. See, profit is given on sales. You know the sales. Then what to do? Take the 12 lakh into 20 by 100. It comes to 2,40,000. Now my dear student, you close and find out the total. How much total we will get? We are getting a total of 12,62,500. 12,62,500. What is the difference? That difference is called closing stock on 31st March 2020. That is your balancing figure. It comes how much? 62,500. Please my dear student, try to understand how to work out. Okay. Since the profit is given on sales, you know the sales. Since there is a match, we have to take 20 by 100. Okay, did you understood this problem? Like that I am going to solve next problem in a next video. Please try to understand how to work out an answer for this. Thank you. Take care. Bye-bye.